With chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put this show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, November 22nd, 2024, heading into Thanksgiving week, a shortened week next week for the market. Hope you all have a wonderful and safe Thanksgiving holiday weekend. Markets this week staged a bit of a comeback. Let's just jump into the numbers. Dow Jones up 1.9% this week. S&P 500 up 1.68, NASDAQ up 1.73, and the Russell Small Cap Index showing some strength up 4.4% this week. And look, we've been saying for quite some time, we really felt there's a lot of value to be had here in the small cap value space, and it's starting to reflect. They're up 9.5% month to date. Taking a look at the volatility index as measured by the VIX, down about 5.5% this week, sitting at a 15.2. That's a pretty complacent number for the VIX. Of course, it can drift a little lower. We'll keep eyes on that. The TLT, that is the basket of 20-year U.S. Treasuries, up about 0.3% this week. So bonds performing a little bit better this week as well. And when we take a look at the sectors, man, this is just something you love to see. This was a really sincere and significant broadening out of this market this week. We saw all sectors do very well this week, all sectors. So you had the real defensive areas like consumer staples up 2.3, utilities up 2.7. And then you had your growthier areas, if you will, like semiconductors up 1.9 and industrials up 2.5, materials up 3%. So all across the board, everything did well. There's nothing that did poorly. Really, I wouldn't even say there's any real significant underperformance anywhere. Everything was really solid this week. Even gold and silver got in on the action. Gold was up 5.6, silver up 3.2. And look, they were really getting hammered. I think a lot of fear money piled into gold heading into the election, concerns that the election wouldn't be resolved quickly, that it could be extended and fought, etc. So a lot of money, I think, poured into gold and silver heading into the election, and a lot of that money came right back out again post-election, and these metals were just taking a real beating here over the last couple of weeks. That seems to have reversed this week. They seem to refine their footing. And we did mention, I think maybe last week or the week before, that I still felt that the fundamentals of gold and silver look pretty good here, and we're not ready to abandon that gold trade just yet. So what's moving markets this week? Well, two things, geopolitics and earnings. Let's go with the geopolitics first. I think that's, look, all said and done, earnings are a bit of a wash. I think the biggest mover this week was geopolitics. Last weekend, you had President Biden announce his approval of Ukraine using U.S. missiles, long-range missiles, to be launched into the heartland of Russia. Now, I don't know why a president on their way out the door would make such a big and bold proclamation and risk such a major escalation, but they did. Then, in response to that, Putin and company changed their nuclear protocols. They already tweaked them once, 3 months ago maybe. They tweaked them again in a pretty significant way last weekend, saying that, hey, they're ready to use nuclear weapons if a foreign entity aids one of their combatants like Ukraine in the way that we're doing. Just kind of like change the policy, say, hey, we can use nukes now. And I think the market was pretty rattled coming into this week. We saw it take some big hits there early in the week. Now, moving forward, again, I think geopolitical issues really were at play here. The market seemed to respond very, very positively after Russia launched a missile into Ukraine. This missile was no joke. It was unlike anything that's been seen, I think, so far in modern warfare. It's a missile that's traveling at like Mach 11. I mean, the thing was just screaming. They're saying it's unstoppable because of its speed. But the good side of it is that there was no nuclear warhead attached to it. I think the market responded very positively to that. I think the market was very happy that no nukes were launched. A statement was made by Russia by launching such a devastating missile, and one that seems to be impossible to stop at the moment. But they didn't attach nukes to it, and the market seemed to respond positively. Now, aside from that, we had some earnings this week. Earnings season is winding down. Not many more companies left. This week, we had a lot of retail earnings. Walmart posted a great number, and they were up about 7.5% or so. Target posted a horrific number, and they got clobbered. I mean, they were down like 19% in a day. We don't own Walmart or Target in any of our models at the moment. But what a tale of two cities, right? Holy cow. One company getting clobbered, missing big, getting clobbered by 19%. The other company hitting and projecting even more positive results moving forward and climbing 7.5%. At an valuation that's already pretty high. Walmart's looking pretty expensive at these levels already. So what's going on there? I tell you, I don't take a lot of good away from it. If you dig into the reports, and although we don't have these stocks in our models, I like to dig into the reports of companies that I feel are good gauges, good things to kind of keep tabs on. And when you look at Walmart, the reason why they're doing so well, they're picking up a lot of $100,000 households. A lot of $100,000 plus households are migrating to Walmart from other places, other maybe higher end retail type outlets. Those dollars are moving to Walmart. They're not going to Target. Target's losing them. And then they're not going to the low end. Look, Dollar General's been getting clobbered all year. Their numbers have been lousy. So look, Dollar General's been getting hit. Target's getting hit. Walmart's cleaning up. And look, Walmart's got a lot of pricing power. And we're seeing a lot of more affluent shoppers migrating to Walmart. That's why they're cleaning up. I'm not really sure that's a great sign, honestly, for what it says about the consumer, but that's what's going on. Another big earnings announcement this week was NVIDIA. Again, a report that was ho-hum. They didn't knock the cover off the ball, but they didn't disappoint greatly. For the last 2 or 3 quarters in a row, everyone's been expecting NVIDIA to be this huge market mover, and it hasn't. It's been a little bit of a dud each time. I say a dud. I mean, the stock's done well. The reports have been good, but they really haven't been market impacting in any way, shape, or form. So that's pretty much what's going on this week. Economic data, bit mixed, honestly. Some good, some bad. Leading economic indicators down again. Man, 32 months in a row. This is historic. Never seen anything like it. Leading economic indicators, they tend to project recession, but we're in uncharted territory. Normally, you get a couple months of negative back-to-back on the LEI, leading economic indicators, LEI. Then you can expect a recession about 9, 12 months out. And like I said, we're like over 30 months now with negative numbers, which is just unbelievable to me. But anyway, that's where we are. Next week, more economic data. We got a PCE number. That'll be big. That's this Fed's #1 inflation number there they like to watch. A few more earnings reports. It'll be a shortened week next week with Thanksgiving holiday next Thursday. So we'll just continue to sit where we sit right now. We raised up a little bit of cash here a couple weeks ago. Market still looks a little rich here on some metrics. Some metrics it looks rich. Things like the S&P oscillator, not so much, but some of the DeMark charts and things like that, market looks extended here. Will the market have that big seasonal push into year end, or did it pull a lot of that forward, and will it kind of end the year on a little bit more of a whimper? I don't know. Look, traditionally, you get a lot of folks in my industry start chasing the market, trying to catch up into year end, and they tend to chase the winners that have been winning throughout the year. That tends to happen year in and year out, but not always. So we're just going to stand pat, maintain where we are right now, and look for opportunities as they arise. Maybe we'll get some, maybe we won't. Either way, we're good, because that's how we've got things structured at the moment. So either way, we're good. And I hope you're good. So between now and next few meetings, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it's retire a little early, buy that next vehicle, take that big trip, pay for college or a wedding. Hey, you know what your goals are. Don't just think about it. Think big, think BIG, and I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.